I'm going to do something that the business credit gurus won't do. I'm going to fully break down how to read and understand your Experian business credit report and Intelliscores. And also, I'm going to tell you guys why Experian is the most important credit score for all businesses. You don't want to miss out, so stay tuned. My name is Kelvin McNeil, and welcome back to my channel where we discuss mindset therapy, financial wellness, and real estate. But in today's video, we're going to be ripping the lid off of Experian commercial so that you fully comprehend the most complex of business credit scores and reports, allowing you to access the business funding that your corporation needs so that you can scale beyond your wildest dreams. Listen, guys, if you're not subscribed, what are you waiting for? Go ahead and hit that subscribe button to join La Familia, or follow me, or I should say, and follow me on Instagram at Kelz_Mac. That's KELZ_MAC for more financial insights, or to simply connect with me if that's your thing. Okay, so first things first, for my newbies, let's go ahead and get through the basics. Most of you know that Experian is the leading consumer credit bureau, but did you know it's also a leader in business credit reporting as well? When a new business entity is created, Experian assigns a BIN number, right? Then once a vendor reports a payment experience to Experian, you'll have a credit line. Now, in order to get a copy of your business credit report, to verify and or update your business information, you want to head over to their website, which is businesscreditfacts.com, as you see down here on the screen. This is also where you can dispute any inaccuracies that you may find. And then for a small fee, you can actually access a live copy of your business credit report 24/7, 365 days a year. Now, this is important because the other credit monitoring apps like NAV and others are sometimes delayed, and you'll only be able to access an update once every 30 days. Now, let's talk about why you want to even invest money in credit reporting, because anybody who you apply with, whether it be a vendor, a lender, a creditor, they will be looking at your credit report for the following reasons. They want to see your background in reference to your business information. They also would get a comprehensive financial snapshot to figure out how well your business is doing and to learn about the different risk levels. Now, the credit risk factors will help them avoid surprises about you as the current customer, and also allow them to review any credit increases to see are you overextending yourself when it comes to getting these different loans and business line of credit. Then, of course, they also get a copy of any of your collection history in your banking and trade history. They get to learn about any past liens, judgments, or any bankruptcies. And if you have any UCC code filings, which is the Uniform Commercial Code, they will find out if you have any violations as well. So why not stay on top of your own business credit profile so that you can dispute information that you disagree with? The Experian Business Credit Score is actually called the Intelliscore. And your Intelliscore, just like your paydebt score with Dun & Bradstreet, ranges from 1 to 100, except these two credit scores are completely different. Like, they're on two different planets when it comes to how they calculate your credit score, which we'll dive into soon. Now, Experian is the second largest nationwide business credit reporting agency, second to Dun & Bradstreet. So building and maintaining a positive Intelliscore should also remain a top priority for you. Experian is used primarily by credit card companies and non-traditional business creditors. And to be honest, the biggest difference that you'll learn between the Intelliscore and your paydebt score is your Experian business credit score is hypersensitive based on the following 6 categories that do impact your score: years in business, the number of inquiries you may have, any collections and the amount that you owe, your payment history and the average days late that you've ever been, the number of open lines of business credit or trade references, and then lastly, your credit utilization. Credit utilization is a special case with Experian, but I got a whole slide that we're going to dive into to talk about why business line of credit and revolving debt is different with Experian. How lenders and vendors use your Experian credit report. So your Intelliscore is important, yes, but your business credit risk score will be the difference between you getting approval or being denied for funding. It comes down to two things. Are you considered a high risk or a low risk? Experian archives a snapshot of all business credit profiles and scores on a monthly basis spanning back over a decade. Using something called a model validation, lenders will predict good versus bad outcomes by comparing your archived business credit reports to your current ones at the time that you apply. I'm about to show you next, but your Experian business credit profile displays various performance tables and odds charts. So the first one we're going to go over is the model validation odds chart. So if you can direct your attention over to the green column, which is right over here, you see this is your risk score range. It ranges from 1 to 5, with 5 being the lowest risk, which is what you want, and then 1 being bad. That is your highest risk, okay? The yellow column, just for this example, shows how many accounts this person has. So in this example, we're going to talk about 5 different scenarios where each person had 20, or I keep saying person, but each business, each company had 20 accounts. So based on that, how many of the 20 accounts went bad, meaning went delinquent? So at the very top row, we got the risk score was 5, which is good. That indicates a low risk, right? Well, we can see they had a 5% bad rate because only 1 out of 20 went bad. Now let's go down to the worst, the bottom of the barrel. Somebody who has a 1, which is considered to be a high risk. Well, out of 20 accounts, 8 went bad. So that means they have a 40% bad rate, which is not good at all. It says this is the bad rate for each score. By knowing what the risk of the score is for your portfolio, you can understand the risk of new applications going forward. And this chart I'm showing you was created by Experian. I didn't create this goofy looking angel with black glasses. This is literally a display that Experian uses to show lenders what they're going to get when they purchase your business credit report. Now, this is the full odds chart that includes something called the KS. And the KS is just the maximum difference between the percentage of good accounts versus the percentage of bad accounts. So if we look at, again, the top versus the bottom, you would be surprised, but the second column, you may be surprised, but the second column actually had the highest KS score. When you look here, it says 70% minus 33% equals 0.37. And that's the KS. And that's, again, based on the maximum difference between the goods versus the bads. When you actually pull up a full copy of your Experian business credit report, they call it the Experian Business Credit Advantage Report, because the Business Credit Advantage is actually a credit monitoring program. And on this credit report, you'll see all of your payment trade lines. Next, you'll see your lender consortium experiences. So your lender consortium experiences are actually external trade lines that will be reported to Experian. Now, these are from various financial exchange trade accounts that share your commercial credit card data with Experian. So remember, I said Experian is credit card companies' favorite credit bureau, and this is why. You can have other credit cards that don't directly report to Experian. However, your information and your payment data is still shared with Experian. And those are called the lender consortium experiences. And I'll show you what that looks like on the credit report. But it shares information from the SBFE, which is the Small Business Financial Exchange, Credit Safe, and more. Now, you also will get to see your aged trade lines, meaning trade lines that are no longer in use. They're going to be listed as inactive, and that is any trade line that has not been used or hasn't reported payment data in over 6 months. Next, you'll see your business inquiries within the last 9 months, any payment trends compared to how other businesses in the same industry are doing, your UCC filings. Remember, we just went over that. Those are your uniform commercial code detail and documents. And if you have any public information data, public records like tax lien filings. Now we're going to talk about revolving debt as it pertains to how it shows up on your Experian business credit report and how it impacts your Intelliscore. So keep in mind, most credit cards report to Experian. The higher your utilization, the lower your score. Remember that. The highest amount used becomes your reported credit limit. That's a surprise. This is nothing like your personal credit report and how they look at or how they report your credit card usage. So, on the personal side, think about this. Whatever your credit limit is, whatever your approved maximum credit limit is, that's what reports as your credit limit. And then however much you owe is shown as the balance. And that gives your, overall credit card utilization. But on the business side, it's not the same. So I'm going to give you an example. Let's say your business is approved for a business credit card with a $20,000 line of credit. You spend $10,000 of that $20,000. Then you make a $1,000 payment on the first billing cycle. Now, how will this be reported to your Experian business credit profile? You may think, just like on the personal side, it's going to show up saying that you have 50% utilization, and then after you make the 1,000, it's going to go down, but that is not the case. Now, the correct answer is Experian will actually display $10,000 as your credit limit and then $9,000 as your current balance at 90% utilization after you make that $1,000 payment. Because go back to the top line. What do we say? The highest amount used becomes your reported line. So basically, your business will be scored based on how it pays what you spend, not what you don't spend. So in this case, once you pay off that full $10,000, your scores are going to go through the roof. It'll look pretty good. And until you spend more than $10,000, like let's say you spend $20,000 next time, or matter of fact, let's say you spend $17,000, then it's going to show $17,000 is your credit limit, and however much you owe is what your utilization will be based on. So always keep this in mind. All right, guys, now I'm going to show you the different credit monitoring products that Experian has to offer. And technically, there's really just one. So when you go to businesscreditfacts.com, this is the home page. And if you want to pull up your business credit report, you just scroll down, go right here, type in the name of your business, the city, the state, and then you're going to search. Okay. Then once you find your business, this is what you're going to see. And they have 4 different plans, 4 different products, but I'm going to break it down to you in simple terms. If you just wanted to find out what your Experian Intelliscore is with a quick summary, but you don't need all the details, then you can just pay $39.95 per report. If you wanted a detailed credit report that shows all the trade lines and all the detailed information and business info, and also an in-depth credit history with the trades, then you pay $10 more and it's $49.95. The valuation report, I don't really see the value in doing that, so I'm just going to ignore that one. But to me, right here in the pink, this is by far the best and most valuable service they provide. For just $189 per year, you can get a live copy of a full detailed credit report. This is by far the best value, and this is what I would recommend you do. Think about it. You get this, you just pay $189 one time, and for the next 12 months, any given day of the week, not once a month, you can get a live copy of your business credit report with Experian. which is called the Business Credit Advantage. Now, let me show you what that will look like. Let's click View Sample. All right, so here's a sample of the business credit report. So let me make this bigger. Here is a sample of the business credit report with Experian and how it looks. So at the very top, this is the name of the business, LaSalle Medical, has their address. You see it has their BIN. Remember, they're going to give you a BIN to identify you, any family linkage. It also shows the key personnel. So here's the CEO, the treasurer. Remember SIC and NAICS code. So it shows these are the SIC codes and the NAICS code that is currently listed under. It says when they were incorporated way back in 1977. So they got 41 years in the game and they have 100 employees. The sales is here, but to be honest, most of the time it's always inaccurate. It's just like Googling a celebrity's net worth. It's always just hearsay. It's never their actual net worth. You scroll down and then you see the Intelliscore. So they have a 60. Right now, I would tell you, remember, your goal should be an 80. However, I have seen examples of my own business credit report. For example, I've been down in the teens because I was using my business credit cards and churning them when I was doing my Amazon drop shipping business. And even though I had a score in the low 20s or the teens at one point, I still had a low risk score. So Experian isn't so much about the actual score, it's about your rating. So in this case, they have a 60. It says they have low to medium risk. But if you scroll down here, it says their financial stability risk rating is a 1, which is a low risk. And I'm going to tell you right now, this score, this risk rating far outweighs whatever this score is. So even if you get down in the dumps and you get down to the very low score range and you still are considered, let's say, moderate at worst, right? Well, let's say moderate. You're okay as long as this says 1 and you will still get approvals when you apply for things. But let's look at the score factors because it tells them, it says the number of commercial accounts with terms other than 1 to net 30, the number of commercial accounts that's not current, meaning past due, and the number of commercial accounts with high utilization. And then lastly, the length of time on the Experian credit profile. Now, I want to point out something. It doesn't say if these are positive or negative factors, but I'm going to tell you, this right here is a positive factor because they've been in business now for 41 years. And then the utilization should be good because if it wasn't, they wouldn't have as high as a 60. And then everything else we're about to find out as we scroll down, but you can always click here and it will show you some improvement tips. It takes you right down to the bottom. So it says, okay, for this company, they feel that they should have a higher number of net 30 accounts to improve their scores. Here it says the number of accounts reporting in the last 6 months is low. So that means you probably aren't using as many of your accounts. Use a few more so that we can bring those from the outdated account section to the current account section. The length of time Experian has had a credit history on your company affects your score. And it says young companies are penalized for not having long credit history, while other companies benefit from having a long history. So again, they are benefiting from their long history. The amount of your balance and the amount of your previous high credit on one or more trade lines are close. So one or more trade lines is currently showing as having a high balance. Remember, it's based on the highest amount that they've used, not whatever their credit limit is. So let's go ahead and scroll back up to the top. So the next thing you see is kind of a summary. So I want to point your attention right here. You see how it says lender consortium experiences, and it says they have 4. So the neat thing is, if I take you down to it, well, let me go ahead and read this for you. So it says lender consortium experiences. The SBFE data is Experiance's new data source, providing the most comprehensive coverage of small business financial data in the market, established in 2001, blah, blah, blah. So what I'm trying to tell you is, let's click detail. Now, these four are the trade lines that are reporting to the SBFE, and the SBFE is then sharing their information with Experian. So if you've ever watched my YouTube videos, you'll notice I put emphasis on building business credit with the third parties, like the SBFE, like Credit Safe, like Ansania, and we'll discuss those later, because they all share information with each other. It's literally on this credit report, these four trade lines, these four credit cards, okay? And then here are all of the trade accounts. So this category is just showing the recent activity, any accounts that has been used within 6 months. But this is all of the accounts that they hold, that they've ever had. You notice here, payment terms, it says this is a credit account. These are net 30 accounts. This is a contract account for electronic equipment. This is a factor account. Then these are other financial services. You see this says revolving debt. So this is probably a store card, like a corporate store card. Here's a net 45. Now, remember when it told us the different ways or the different factors leading to that score of 60, it said the number of non-net 1 through 30 accounts. Well, they only have one net account that's more than 30 days. If they were to have more net 45s and then maybe a net 60 account, a net 90 account, that would definitely improve this company's credit score. Now, here are the old aged trade lines, the ones that have not been used in at least 6 months to a year or more. Come down here, you see the payment trend. So, this person does a good job. For the most part, they are trending above 95, to close to 99%. Otherwise, they do a very good job making their on-time payments. Here you see the summary of inquiries. So it only shows the last 9 months because that's all you'll be graded on. So each inquiry will be classified based on categories. So here's the categories of inquiries, and then here's the number of those inquiries per month. Here's the collection filing. So out of the entire 41 years that they've been in existence, they only have 3 collection accounts. Here's the balances, the dates, and who the agency is. Now at the bottom, it does show the different leasing agreements. So you see every lease they've ever had. Here you got the filings, the judgments that they've ever had, the tax liens they've ever had. This is one. And then they also had some UCC filings. And that's it. So this is the full credit report. All right. This is what you can expect when you get your credit report. So don't you think that's definitely worth $189 per year to get live updated copies of that report? Next, we're going to have a little fun. Now we are going to play around with this score simulator. This is based on your Intelliscore, and this is going to be a great exercise to just show you the importance of the different factors and how things may impact your Intelliscore. Let's say you have a brand new business. So let's say less than a year old. So let's say you've been busy applying for new net 30s and tier 2 and tier 3 accounts, and you got some business inquiries. So let's say you have 4 or more inquiries. Then let's say the number of lines of credit within the last 6 months. So far, you've been picking up the pace. So you have 2 or more accounts. You have no collections within the last 7 years. You've been paying your bill every single time on time. Lines of credit in use in the last 6 months. Let's say at least 3. All right, at least 3. And it says I am using. Let's say right now you're using none of your available credit. You have the credit cards, but you haven't really used them yet. You have, it says number of lates. Nope. Never been late, never been late. And how many non-net 30 accounts that you have? And we have 0. So based on this, it says that your estimated score could be a 44. A brand new business, under a year old with 4 inquiries, 2 or more lines of credit in the last 6 months. So these are new accounts. Always pay the bills on time, and there's at least 3 or more lines of credit in use, aka trade lines. So you could have a 44, which is medium risk. Now let's talk about some things that could change this. How can we improve this 44 score? Let's come on down and let's say no more increase within the last 9 months. So time has passed. You go from 4 down to 1. Boom. Notice the score jumped up to a 59. Now, let's say, you're continuing to pay bills on time, and you have 3 or more lines of credit in use, right? But now, let's say a whole 6 months has passed and your business went from 6 months old to over a year old. Now look at that. You only gained 1 point, but now you have 0 increase as well. Now you're up to a 66. But remember, the most important part is the risk score. So this risk score is sitting at a medium low risk, which is good. Now, let's say your business is 3 to 5 years old and you have no inquiries, no collections. You've always been on time and you have 3 or more open lines of credit and you really haven't been using your credit card. This is an 85. This is a really good score. Really good score. Now, let's say this business is looking to expand. They want to get more lines of credit, like a business line of credit. They want to go and get 2 Amex cards, or they decide to get a loan. So they apply for 2 different companies. Now they got 2 inquiries. Okay. Also, they got approved for these credit cards and now they are using the credit cards and they pretty much not maxed it out, but they spent all of the money that they had available. So let's say 90 or more. Now they went from a 74 down to a 51. So these are the factors that change your business. However, once you go from here down to below 30%, boom, back up to a 64. And as the time goes, you see how your score goes up, right? Increase, you go from 4 more down to 0. The fewer amount of increase you have over 9 months, the better your score. Obviously, collections are gonna, cause some issues. Average payment history, you go from never being late to having a few lates. You see how it drops your score. And this is going to be the biggest factor when you have these, when you have your payment history hit. And one thing about this section is if you have any tax liens or collections, it's going to hit here. So you can drop from a 76 down to a 20 something if you have tax liens. So I hope those examples just kind of helped paint the picture of how finicky and how sensitive, hypersensitive your Experian Intelliscore can be. But this also gives you an example of how no matter how low the score goes, sometimes you can still be a medium or a low risk. It just depends on what category goes down. So if you find your IntelliScore shooting down, I'm going to give you some tips on how to improve it. However, what you really want to focus on is your risk factor. So guys, that video that you just watched where I'm giving you a full presentation on Experian Business Credit is actually just a snippet of one out of 60 plus videos in my instructor-led, pre-recorded digital course called Green Scale Academy, Capital Freedom. If you're interested in learning more about business credit, and I'm not talking about just somebody telling you what vendors or net 30s to sign up for, I'm talking about if you really want a full, let's say something like a business credit for dummies that covers everything from A to Z about business credit and business funding, then you should definitely check it out at www.greenscaleacademy.com or by clicking the link in the description below. Now, if you guys have any other topics that you want me to cover, I'm always open to feedback. One of my favorite things about my YouTube channel is because it's so easy to communicate with you guys back and forth, unless of course you follow me on Instagram. So again, if you guys have anything that you want me to cover, any topics that you want to recommend, go ahead and let me know down in the comments below. And as always, if you found this video helpful, do me a favor and just show me some love, right? Drop a like and share this video with like-minded individuals. And I hope you guys enjoy the rest of your morning, afternoon, or evening, whatever the heck time of day it is. And I'll see you on the next video.